Welcome back everybody. So this is gonna be a quick update video for you guys on stock market, and before we get started, please smash that like button, and 100 plus likes on this video would be greatly appreciated guys. And if you're new here, consider subscribing. Now if you want to get my daily trade ideas, swing trade ideas, live trading, and you want to support the channel, definitely check out their link down below in the description for Patreon. Welcome back, everybody. So, what do we got next week in the market? We have lots of earnings. Earnings like Walmart, Alibaba, Wayfair, Unity, Etsy. We got big names like Carvana also reporting earnings next week. Now, with that being said, look at this right here, fear and greed index sitting still on fear, just slightly about to cross to neutral. So, it's sitting on 44, and the market's sitting at all-time highs. Now, what happened on Friday? You can see Dow Jones did not participate in that rally, down 0.37%. Nasdaq rallied up 0.41%. S&P flat, and Russell also going flat for the day. Here's the 11 sectors that makes up S&P 500. You can see week to date performance, well, the same names. Technology, communication services, for Friday, and even week to date performance, technology leading the way up over 3%. That is a massive move on technology. But look at right here, lagging behind for the week, healthcare, industrials, even financial here. And then on Friday, consumer defensive, healthcare, basic materials, utilities, real estate, they were all down on the day. Stock market map, well, you can see Nvidia lives on, and once again, almost closing that deep sea gap, up 2.63%. Microsoft down 0.5%. Apple found its rhythm again, up 1.27%. Amazon down 0.73%. Google down 0.5%. Meta up once again another 1.11%. Tesla flat. We got Netflix going up 1.43%. You can see consumer defensive. We got names like Costco, Walmart down, but not by that much. Big name from healthcare, UNH, J&J, and Eli Lilly all are down, and some of these big banks are also flat too. Just a tiny bit of green on Friday. On SPY ETF, it was actually flat on Friday. We saw a bunch of chop back and forth, but we actually went nowhere on Friday with some low volume on it. Now, yes, we did hit all-time highs. Once again, you can see almost 611, and then came back in and closed over previous all-time highs, or at least just over 609. Now you can see right on my screen, upper Bollinger Band coming down. It's sitting right here at 611, and the lower Bollinger Band going up, sitting at almost 597. So we have about $10 to $15 range going back and forth. You can see it right here. But very soon, you're gonna see a big move right here on SPY, whether to the upside or maybe it could be to the downside. Nobody knows. That's how thing goes, right? But the technicals are looking bullish. Now, does that mean we go and chase here at all-time highs? Absolutely not. We have to be really careful trading in this environment where CPI is really hot, PPI was even worse, and then we got job numbers, unemployment, everything is against the inflation. So inflation is not coming down, and I've been talking about it over past couple of months that they're just lying about inflation, that it's coming down. But people that are buying, me and you, people that are watching my videos on YouTube, we are just average people. We buy stuff, we know how much things are costing, and your pay, your job is still the same. You're not getting that much of a big increase on your paycheck, but then you got to pay more for everything. It would be fine, you're getting paid more and then paying more, things kind of just balance out. But here in this case, you're getting the same amount like you did before, maybe slightly, just a tiny bit higher than before. Some raise, some good work, and then you got a raise. That's fine, but that's not enough for this inflation. And now, I mean, soon you'll hear that eggs are worth more than gold, right? It's just crazy how things are, and we need eggs, especially if you want to stay healthy. And a lot of people, I mean, eggs, these are like main source of protein, and a lot of people consume eggs, and that's a big factor. And I'm not even going into other factors where things are even more expensive. So if these things are becoming really expensive and inflation going higher, do you think we're gonna get a rate cut? They're just going, like it just went past, I think, end of the year. Maybe we go into next year until something breaks, something happens that we see, and then maybe a Fed steps in and then they start cutting. But at this point, there's nothing bullish, and the market technicals are looking bullish. Market does not care. Market climbing and just going into brand new all-time highs, and that's why yes, everything is looking good. Technicals are bullish, but are you supposed to buy here? I don't know about you guys, but I'm not buying anything here, guys. Especially near all-time highs with all these bad data, market just shrugging everything off and going even higher. So next week we have 4 trading days. Monday, I think it's Trump's day, President Day, so market will be closed, and then Tuesday market will be open. So we have 4 trading days next week. Starting Tuesday, guys. 609, your key line in the sand right here on SPY. That gives up down here at 5-day moving average, which is at 606. And then below that, we also have support near 604 to 603, this key line 20-day moving average. Underneath that level, 600, and then 596. Lower Bollinger Band right here on this daily time frame. To the upside, we're already pretty much trading into blue skies. As long as we're over 609, this thing can push up to 615, 620, and then maybe even going higher from there. On Triple K was up actually 0.42%, and we are trading pretty much outside the Bollinger Band and closed at right here over this previous high, which is at 537. So going into Tuesday's session, 537, your key line in the sand. Underneath that level, we might see a drop down to 533. We also have support at 530, 527, and then we can talk about potentially more downside right here on triple Qs. To the upside, if we can clear and stay over previous high right here, 539, 538, then you're going to see a push up to, especially here on Qs. Even though the Bollinger Band not really moving that fast, it can go up to 545, 548, and then 550. On Dow Jones, it's down 0.33%. So you guys saw that. It was a rally led by tech pretty much all week, even into Friday. And Dow Jones not participating in that rally, just consolidating right here. Now, does that mean it's going to join the party and possibly will go over this previous all-time high, 451.55? If that happens, we can see a push right here on Dow Jones. But at this moment, your key line in the sand for Tuesday, 445. If we open underneath that level, you'll see a flush down to 438, 433 gap fill reversal. To the upside, as long as 445 can hold, then there is a chance this thing can push back up to previous all-time highs right here at 451.55. So yes, we're sitting on fear and greed index. Market has got really bad data over last week, and small caps are just looking worse right here. You can see it's not pushing up, it's not going down, just sideways action, and pretty much, I mean, you can call this a massive bear flag pattern here. But so far, no breakdown yet. So until we get more rate cuts, it's nothing bullish about small caps. We had this massive push, and it was pretty much on the rate cuts and Trump winning and all that. But now everything faded, and we are back down here, just going sideways. So here on IWM, critical resistance to break 227. Over that, you'll see 230 and then 238. This thing cannot get over 227. Breaks under this 223.47 lower Bollinger Band. We do have unfinished business down here. We can come down anytime to 20, and then this gap even comes into play at 212.78 on small caps. On VIX is down 2.19%, and you can see this thing is just wedging right here. And if you look at my screen, these candles, and then we saw a massive pop. Every time we came back down here near 14 bucks to $15, it was holding, and then we saw a big pop back up to the upside. Now, is that going to happen again? I don't know, but you got to keep that in mind. It's trading near lower Bollinger Band, which is sitting near 14 bucks. So there is not much downside on VIX, but there is tons of downside in the market if things wants to come down. So you got to be really careful. If this thing breaks over, I would say, especially 16 bucks, that would be breaking out of this wedge pattern. And if that happens quickly, you can see this thing heading up for 18 to 20, and that means what? Market will pull back. Now, key line in the sand, I would say, right here near 14 bucks. That kinds of lines up with this lower channel, and then also lower Bollinger Band right here, which is sitting at 14, and this thing also getting that Bollinger Band squeeze. So something has to give, something is going to happen, and we will see that in next maybe 1 to 2 weeks. Quickly before we actually wrap up this video, you can see the dollar actually fell on Friday down to 106.51, and the support is so far holding. We did not exactly touch that level, but it's sitting right there. So that's going to be a key line in the sand. If this thing cracks underneath that level, there is going to be more downside, and we know that dollar goes down, S&P 500 will be going up. Now, if this thing bounces from here, then watch out for a move back up to 107.50, and if we can get over that, that is when you're going to see a big push to the downside in this market. Now, what is the 10-year yield doing? And that one was also down. You can see 1.17%. We had this big pop, and now there is a drop all the way down to 4.46 and pretty much holding on right there at 4.46. So if this thing cracks underneath that level, you're going to see a flush, possibly more downside, 4.32. But if this thing stays here, holds as a support, maybe some consolidation, and then we see 10-year yield going back up to 4.66, and over that, that means one thing: market will likely to come down a bit more in next 1 to 2 weeks. So definitely keep your eye on this, and also on dollar and VIX. Everything is just lining up for possibly a breakout to the upside, or who knows. This market, especially with all that data, if all that data cannot kill this market, cannot get at 10%. I'm not talking about no crash, guys. Don't get me wrong. There is no crash, nothing happening at this moment. I'm talking about a good 10, 15% correction. If we cannot get that, we get a dip like 4%, 3% down day, and the next day, it's a gap up and go. And the dips are bought up immediately. As a matter of fact, when I see those opportunities, deep sea gap, we played it. We made a ton of money. All the data, tariffs, came out, and there was a gap down. Any bad data and the market drops, only way to make money, buy them dips. Now, if things are trading at all-time highs, no opportunities. It's really hard to make money because you're risking a lot of money buying at all-time highs. And we all know how smart money likes to do. They would keep you really bullish at all-time high, and they will cash in and get out, and you're holding a bag right up here. I'm not talking about TNX, but especially on the market, like Nasdaq or even S&P. So be careful trading in this environment, and we'll do this analysis again on Monday. And don't forget to hit that like button, guys. All these videos are coming out because of you guys. And if you guys don't share, don't put that like button, the comments, what's the point of making videos? So definitely more comments, more likes are really greatly appreciated. And I would look, forward to that. And the next update will come out Monday night.